and good morning, good evening, good afternoon, traders all around the world. This is FXPassion broadcasting you live on YouTube. And this is Forex Trading for Beginners. Melbourne, still 2 a.m. Singapore, 11 p.m. Madrid, 4 p.m. London, England, 3 p.m. GMT. And we have New York and Canada, Toronto, 11 a.m. Everybody, this is Forex Trading for Beginners, and our goal for you is to become consistently profitable, minimum 3 months, knowing when, how and why you make and or lose money. You should not be allowed to trade with real money until you reach the goal. No losing months in between the 3 months, everybody. You should demo trade, right? January, February, March, and be profitable minimum 3 months. And you should explain when, how and why you make, and when, how and why you lose money, right? And if you're not going to listen to us, here is the disclaimer: don't trade with money you cannot afford to lose, and the webinars are not investment or trading advice. They are for educational purposes only. Your job is to question everything, and remember, after you understand all these topics here, the concepts and everything, trading is still 80% emotional, psychological, and only 20% technical. So in order to be successful at trading, you need to have your mind and your heart in the right place. Also remember, if being consistently profitable is difficult, you probably still have things to learn, and if your way is not working, why don't you try ours? Just give it a try. Remember, 90% of traders who makes it between the 3rd and the 5th year of learning. For homeworks or additional coaching or training or just question, you can send your questions to the Gmail contact, to the Skype contact, or to the LinkedIn contact. Eddington, apparently my mind is in the wrong place. Eddington, it's subconscious, your problem is a negative word, your challenge is subconscious. It's nothing wrong with your mind, don't worry, but it's subconscious, okay? So that being said, everybody, today the topic is entries and equity management. We are going to talk about candlestick formation, of course. Now, this is the GBP USD 1 hour chart. Who entered in any GBP pair, before we start the webinar, who entered in any GBP pair and got burned? Everybody, if you're a beginner, especially if you're a beginner, don't enter GBP pairs today. Today is the Brexit vote, so the market can go up and down and play around, right? Who burned? I know some traders, beginner traders, right? They didn't listen. I told them stay out of GBP pairs. No, I'm going to trade, I'm going to make a profit. Right, you are going to make a profit today. You are not profitable for 2 weeks and you are going to make a profit on a news day? I don't think so. Okay, DJ Pants, I did, but I didn't. Well, I guess you are not a beginner. Okay, but I'm talking to the beginner trader, which doesn't have a strategy, doesn't have a set of rules, and he just jumps into the trade. When I'm going to tell you where a student of mine lost. He entered here selling. Oh, the market is falling. The market is a dangerous place today for the GBP pairs. Okay, I strongly believe in GBP. I entered long. Well, if you're a beginner trader, I'm going to give you a suggestion because I don't have the crystal ball. If you're a beginner trader, stay out. Okay, if you're an experienced trader or a professional, well, you can play around with GBP, But today is the uncertainty about the Brexit vote, everybody. I'm an expert on roulette too. I always bet on the black. I'm 45% correct time, 100% of the time. Nice, nice. So you're making your money, right? Okay, everybody, give me a currency pair and a time frame so we can start talking about entries and equity management. We are going to talk about the candlestick formations, of course. So give me a currency pair and a time frame. If not, we are going to go with Canada CHF today. Canada CHF, right? And let me see, where are we? Canada CHF. Canada CHF, let's compress the chart. Right, okay. Canada CHF. And we are going to do a trading NZD JPY, Canada CHF. DJ Pen, and okay, you two are for NZD JPY. Okay, let's go on NZD JPY, NZD JPY. Great, 1 hour chart, NZD JPY. Let's wait for the software. Okay, everybody, so the market is making, until here, the market was making higher highs and higher lows, right? Until here. So this is going to be our trend line, the overall trend line. And let's start. Let's find the down trend line break. So this would be our down trend line break. Whoa, this was a big one. Down trend line break. So let me see. Down trend line break. Let's adjust the trend line. I cannot cross the candlesticks, so okay. So we are going to try to do this NZD JPY 1 hour chart. When this is over, then we are going to check the Canada CHF. Okay, so this is the outer, this is the inner downtrend line, right? Okay, this is the inner, and you have the aggressive one, aggressive downtrend line somewhere in here. I cannot break the candles, right? Okay, so we don't have the crystal ball, right? This is just a trading exercise, everybody. And what is different today, we are going to talk about entries and equity management together with the candlestick formation. So let's see that we are here, right? We are here, and the market was falling so far. The market was falling, and this is our aggressive trend line, and somewhere in here the market broke our aggressive downtrend line, right? And what we are going to do today, in the previous trading exercises, because we don't want to complicate too much, we said, well, we're going just to put our stop loss below or above the trend line, right? Now today we are going to talk also about equity management, and it's going to be a little bit more complicated for the beginner trader. Nonetheless, you need to learn this, everybody, okay? Because we are going to talk about equity management rules, and the basic equity management rules says if you are going to risk 1, you need to earn 2. This is the basic equity management rule. So let's start. Let's say this is, as a beginner trader, you have your 3 trend lines, right? You have your 3 trend lines, like here. But just for the trading purposes, let's say that you are an aggressive trader and you say, well, I'm going to enter when the market is going to break the first downtrend line, right? So if you are an aggressive trader, you are going to start trading when the market breaks the first trend line. If you want to be more secure, then you are going to wait for the next trend line break. And if you are maybe an investor, I don't know, even more, you know, you are a little bit more scared or a little bit more unsecure, you are going to wait for the confirmation of the trend change, right? So we're going to start with the aggressive traders, and we are here right now, and we are going to check the bullish candlestick formations for this purpose. So here we are, we don't have the crystal ball, right? The market kind of broke our down trend line, so we need to wait for two highs and lows. So we are not going to enter yet, not yet, right? So we are going to wait, and the market reversed, as you can see. So let's start trading, everybody. So this is going to be black, counter trend line break, right? Counter trend line break. Okay, let's start. Is this or is this not, everybody, the circle a bullish candlestick formation? Is this or is this not? Red arrow, let's color code in red, a bullish candlestick formation. Don't be shy, there is no right or wrong. You can say I don't know, you can say I think it's tweezer tops, or it's bearish engulfing, whatever. Eddington says yes, Morningstar. Okay, so should we enter a long trade right now? Hello Miguel, how was your tennis? Bullish Morningstar. Okay, so yes, this is a bullish candlestick formation. Question number one. Question number two, should we enter this trade? Everybody, should we enter this trade? Eddington says no, no counter trend line break yet. Great answer, Eddington. So let's wait, and right now we have a counter trend line break, everybody. We have a counter trend line break, right? So the same question, should we enter our trade right now? Miguel says agreed. DJ Pens, what do you think, my friend? Should we enter right now? Should we buy the market right now? We have a bullish candlestick formation and we have a counter trend line break. Eddington, Miguel, DJ Pens, what do you think? If you say yes, or do you think we should stay out of the trade? There is no right or wrong. Eddington says next candle yes. Okay. DJ Pens, what do you think? What do you think, DJ Pens? Miguel says out. Miguel, why? Teacher Miguel, why do you think we should stay out, even though we have the candlestick, bullish candlestick formation, and we have a counter trend line break? Why do you think we should stay out? And there is no right or wrong, right? We have traders entering these trades, we have traders staying out of these trades. Why should we stay out, Miguel? Okay, and we are going to see, let's see, we are going to, this is our entry, right? The green line, this is our entry. In the meantime, we are waiting for the answer. Not fully counter trend line break. Yes, we have a full counter trend line break, Miguel. Yes. So, talking about entries and equity management, everybody. Now, if we enter in here, right, we have a counter trend line break. If we enter in here, just graphically, this is our stop loss. If we put our stop loss 15 pips, below the candlestick formations. This is our stop loss, just graphically. Okay, we are not going to waste any time make calculations, and this is one way. So if we are going to risk that much, we need to earn minimum double, right? This is the basic equity management formula. If you are going to risk 1 pip, you need to go after 2 pips. If you are going to risk 1%, you need to go after 2% minimum. Better 3, 4, or 5, but this is the minimum, right? So here is our stop loss. This is going to be our stop. Let's color code this in red. Okay, where is the... I need the line here. So this is red, right? This is our stop loss. Stop loss in here, right? DJ Pen says risk management. So would you enter or not? DJ Pens, would you enter this trade? Miguel says stay out. Eddington says let's enter. And we have 2 traders. One is going to put his stop loss 15 pips below, and the other, equity management, the other is going to put the stop, oh my gosh, down here, up trend line, right? Down in here. But I didn't start correctly, everybody, this exercise, because when we trade we don't have the crystal ball, right? So, oh, this is a mistake. I made a mistake right now. When we trade, right, we don't have the crystal ball, so this is going to be our uptrend line so far. This is going to be our uptrend line in here, because we don't have the crystal ball, right? And this is our uptrend line, right? Somewhere in here. What about now, teacher Eddington? Should we enter this trade, bullish candlestick formation? DJ Pen says not. Right. Okay. Not. So this is the uptrend line. It's broken. Right, we have a downtrend line, we have the counter trend line break, right? So the only stop we are going to use, we don't have other uptrend lines so far. The only stop we are going to use the stop 15 pips below the candlestick formations. Okay? However, you shouldn't take this trade, everybody. You shouldn't take this trade. Why not? Why not? Where are we? Are we in a bearish territory or are we in a bullish territory? So if this is the downtrend line, this is the bearish territory, right? And when we have a trend line break, this is bullish territory right now, and sometimes the market fall again into bearish territory. You need to learn this stuff, everybody, especially if you're a beginner trader, right? So even though we have our risk management in place, we have our bullish candlestick formations, we have our stop, and we have our take profit, right? We are in the bearish territory. DJ Pens is right, so we shouldn't enter this trade. Okay, and let's see how it's going to play. Let's see, the market is moving and moving up, right? Let's see how it's going to play. Okay, went up, bam, hit our take profit, right? Now, We are telling you every day you need to explain your profits and you need to explain your losers, right? So we won the first one, right? Okay, we won. The market hit out. Oh, Passion, but you said that we shouldn't take this trade. You are right. You are right. You are right. If you would take this trade, everybody, and I would ask you, well, why did you win? But we did not take this trade. Now you can withdraw your... Yes, sir. Yes, sir. I'm telling you because I know traders that are entering the market in here, right? Because we are learning the concepts, everybody. Okay? Let's not make this too complicated. Let's not make this too complicated, right? Until here, and this is the concept, until here, right? The market was bearish, bearish trends, bearish structure, right? And the market reversed and we start to making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? Higher highs, higher lows. And some of the beginner traders, me too, right? In the beginning, we were entering long trades and we were entering against the general trend, right? So we would enter risky trades because this is a down retracement so far, right? So we are in a down retracement. And you need to understand, everybody, these concepts, right? Oh, but the market is moving up. Yes, it is. But until the confirmed trend, right? This is still a down retracement. Okay? This is still a down retracement. The market kind of broke this downtrend line, but as you can see, when we entered the trade, we were in bearish territory. The market didn't make a higher high and higher low on the other side of the downtrend line, right? The market didn't make a higher high and higher low. So if this was a trade and we won, right, I would ask you, why did you win? Well, Passion, what do you mean why did we win? We won because we entered. Yes, but why did you enter in here? Oh, I entered because of the bullish candlestick formation and the counter trend line break. Yes, but why did you enter in the bearish territory? Why did you enter here? And the answer goes, oh, because the stochastic or the RSI or it doesn't matter. Why did you enter in the bearish territory? And the answer goes, because, you know, but I won. Yes, you won. Congratulations to you. You got lucky. Don't do this, everybody. Don't enter trades in the bearish territory or bullish territory with the bearish candlestick formation. Follow the rules and the concepts, because I felt lucky. Yes. If you're a beginner trader, don't be naive, everybody. If you're going to win 1-2 times, right, breaking the rules, don't be naive, okay? Anyway, today's lesson is about entries and equity management. So, as Eddington said, we are going to adjust. Right, now we are going to adjust our uptrend line. So we are going to delete this one. And we are going to start to trade, right? So we have the two different stop loss levels. And the first one is below the uptrend line. We're going to erase this one, right? So let's trade. The market is moving up. We are waiting for the next retracement, right? Retracement. Okay. and we are here right now. Is this a bullish candlestick formation, everybody? This is our uptrend line, and our stop is going to be below the uptrend line. Is this a bullish candlestick formation in here? Should we enter this trade? We are in an uptrend right now. Now we have the confirmation. We have two pairs of highs and lows on the other side of the aggressive downtrend line. Eddington says tweezer bottoms. Okay, great. So this is a bullish candlestick formation. Yes, sir. Let's color code this in black. This is going to be a black line. Okay. And so we have two stops. Stop number one is going to be 15 pips below the candlestick formation. The other stop is going to be below the uptrend line. So equity management, just graphically, this is going to be our stop, right? So let's clone, and we need to profit at least double, right? Clone up here. Now, should we enter this trade, everybody? What's the problem? Tell me the problem you are seeing as a beginner trader. Now we are on the right side of the uptrend line. We have a counter trend line break. We have tweezer bottoms. What's the problem in here before we enter this trade? And if you're going to use your stop below the trend line, this is going to be your entry, and just graphically, no calculation so far, this is going to be your take profit level up here, right? So equity management, the tighter the stop, let's write this down. Okay, let's write this down, everybody, for the beginner traders. Equity management challenge. It's a challenge. Okay. Number one, tight stops equals higher risk to be stopped out, but faster profits, right? Faster profits. And number two, bigger stops equals less risk, still a risk, but less risk to be stopped out, but let me see, lower, not lower, slower profits, PRO, slower profits. Okay, so equity management, this is a challenge because there is no right or wrong. You can put your stop loss, you can put a tight stop, but you have a high risk to be stopped out, but faster profits, right? Because our take profit for the trader with a tight stop is here. This is going to be right, and the take profit of the second trader, which goes with the stop loss below the uptrend line, is here. So bigger stops are less risky, still risky but less risky to be stopped out, but slower profits. We need more time, right, to take our take profit, right? If you are going to risk one, you need to earn minimum two, everybody. So let's trade. What's the problem? The problem is the inner downtrend line. This is the problem, right? If we are going to enter this trade, this is going to be a risky trade, because as you can see with the red arrows, our take profit, so the entry is okay, everybody, right? The entry is okay. We have bullish candlestick formations, formation, we have a counter trendline break, so the entry is okay. What is not so okay is the take profit level because of the down trend line, because it will from resistance. Yes, okay, so this is going to be the so-called 50-50 trade for the beginner trader. Okay, Passion, would you enter this trade? Yes sir, I would, because I don't have the crystal ball, right? The entry is okay, so let's trade. Let's see what is going to happen. The market went up, up, up. See, we are near the downtrend line. What is happening? The market start reacting. Went down, oh, went down. We are almost stopped out. The market stopped out, the trader number one, right? And stopped out the second trade, so we have a loss right now. We lost the first trade. Oh, what did we do wrong? Nothing, we did nothing wrong, right? The entry was okay. We just entered a 50-50 trade, right? Because the market was near the downtrend line. Why is this the 50-50 trade? Because, you know, the market fell down in the same way that could go further up, right? And we explained to you before in the beginning, everybody. We said to you, if you are an aggressive trader, right? Remember, we have the three trend lines. We explained to you, if you're an aggressive trader, you would be trading from the first counter, from the first downtrend line break, right? And we said to you, well, if you want to be more secure, wait for the second, and if you want to be even more secure, wait for the market to cross the long-term downtrend line, right? So nothing wrong, everybody. This is part of trading. Nothing wrong, we are still here, right? And we were stopped out. Okay, so we are stopped out, we lost on this trade. Nothing wrong, so okay, we are here. Let's see what is we are going to clean up the chart. The market stopped us out, so this trade is not valid anymore. Clean up the chart. The market broke our uptrend line, and let's see, we are stopped out. We are here right now. Okay, we are here right now, and we have a second counter trendline break, right? So this is going to be black, and we are here right now. What should we do? So if you're a beginner trader, I would be afraid, everybody. I would be afraid to take another trade, right? So is this a bullish candlestick formation, everybody? Miguel said second show when possible. Second show. Could you please show the daily for a few seconds? The daily chart? Miguel, we are on NZD JPY 1 hour chart. Do you want to see the daily chart? Yes, sure. NZD JPY daily chart. Okay, this is the daily chart. Okay, but we are not talking too much today about the confirmation period. We are talking about different entries and equity management. Okay, so we are here, everybody. Should we take this trade? And is this a bullish candlestick formation? What do you think? There is no right or wrong. What is this? A bullish shooting star, a bullish morning star, a bearish engulfing? What is this? Is this a bullish candlestick formation? And question number 2, would you enter this trade? I wouldn't. I would be scared, right? Bullish morning star, says Miguel. Yes, sir. I would be scared. Why I'm scared? Well, I'm scared because I just lost on a trade because of this downtrend line. And now this scares me, right? So, and our uptrend line, the market broke our uptrend line. So I would stay out, right? And I would just stay out for a long trade. Okay, so I'm staying out for this one, and I will just monitor the market. And now I am angry, right? Because man, I should enter this trade, you know. The market would hit my take profit level. Don't break the trading rules. Stay strong. We are telling you every day, stay strong. Don't mess with the trade. Obey the rules, right? When you are going to get consistently profitable, everybody, is when you are going to sustain the patience to wait. Okay? So we are still here waiting, right? And finally the market broke the downtrend line, right? Now I'm happy, right? The market broke a downtrend line, and we're going to delete a few things. The market finally broke the outer trend line, and we can finally adjust our long-term uptrend line. So now I'm happy, right? As a beginner trader. Let's delete a few things. Now, this is still the challenge, equity management. And let's see, we have an uptrend line. The market is making higher highs, higher lows. Now structure, higher highs, higher lows. We are going to wait for the retracement. We are here, and the market start retracing, right? We are going to delete this downtrend line, is not valid anymore. We have our uptrend line, so, and let's try to make some pips, right? Okay, we are here finally. We are here. This is our counter trend line. Counter trend line, the first one is here, and an aggressive one counter trend line would be here, right? I need to move one more, one candle more. Okay, great. So this would be the aggressive, right? The aggressive counter trend line break. So is this a bullish candlestick formation? And question number 2, should we enter this trade, right? And equity management and entries, the first trader is going to put the stop loss 15 pips below, right, the candlestick formation, and the second trader is going to put the stop loss below the uptrend line. Shooting, bullish shooting star, yes sir, correct. Would you enter this trade, Miguel? And equity management, just graphically, right? This would be our, we would enter on this one. This would be our entry, right? Aggressive one. So our take profit should be double. Okay, 1 and clone again. 2, right? Remember the equity management challenge. Tight stops equals higher risk to be stopped out but faster profits, right? So the trader number 2 is going to risk that much, right? And clone. Let's see, profits and clone. Take just graphically, no calculation. We're not going to waste time to make calculation, but if you're going to risk that much, you need to go after that much. But better if counter trend line break occurs. Yes, so okay. And we are here right now, finally, right? We have a counter trend line break. If you are not sure, everybody, you would enter at a different level. So let's see, we are trading this one and the market is moving up, sideways, down. Now I'm in fear again, right? Stay in the trade. Stay in the trade. You have an uptrend line. Stay in the trade. Oh, but the market is going against me. 8 times 9 out of 10 the market is going to go against you. You should remember this when you are trading, especially if you are a beginner trader. So, and finally, whoa, so as you can see, everybody, what happened? The trader number 1 was stopped out, right? The market just stopped out the trader number 1. So there is no right or wrong, but we are telling you tight stops have a higher risk to be stopped out, but faster profits. Let's see. Let's see, the market went up. Let's see what is going to happen. Up and down again, right? Now, even though I'm a second trader, now I'm fearful, right? And we're going to extend our uptrend line. And man, almost, and hit my stop again. Right? We lost the second trade, right? Again. Now I'm what? Now I'm angry, right? Man, these strategies don't work. Well, wait a minute. Wait a minute. Wait a minute. Wait a minute. You need to know why are you losing. Why are you losing? Why did we lose? Why did we lose? Well, we lost because we entered, we deleted, right? The inner trend line, right? Is this one. Okay, so this was the inner trend line. Okay. Okay, here. Okay, right? Oh, the market broke the inner trend line. Come on. Okay, somewhere in here, right? I cannot break the candles. I'm breaking the candles right now. Okay. So, big picture, everybody. Why did we lose the second trade? Well, this is the big picture. You have the 3 trend lines, right? And as you can see, even though you are an aggressive trader, we are in a down retracement, right? This is why we lose. And even though the market broke the aggressive trend line, right, we lost on the trade. Even though the market broke the inner trend line, right, we lost on the trade. So now I'm angry, right? As a beginner trader, now I'm angry. So we are here right now and I don't want to play this game anymore, right? So what I'm going to do, I'm going to short the market right now, right? So our uptrend line, the market broke. Our uptrend line again, right? So the market broke our uptrend line again, right? Tell me, everybody, let's learn something together. What I'm doing wrong today? I'm doing anything wrong today? I mean, the lesson is equity management. What I'm doing wrong? Why am I losing trades? Who knows? Am I doing anything wrong? I lost 2 trades. I'm thinking, well, I'm going to short the market right now, right? And I'm going to short the market. Here is the downtrend line. I'm a beginner and I'm pissed off right now. I'm watching these webinars and these strategies don't work. What am I doing wrong, everybody? Don't worry, I won't be offended. We are learning. You can say things as you want. Passion, because you are stupid. Yes, but explain me why. Everybody, this is my problem. I'm your student, right? I learned the concepts, right? I lost 2 trades. I learned how to trade bullish candlestick formations in an uptrend, and we are in an uptrend. The market is making higher highs, higher lows. So how come did I lose 2 times? Teacher Eddington, Teacher Miguel, you have more experience. Why did I lose 2 times? I'm angry right now and I want my money back, right? And I'm here right now. And what I'm going to do, I'm going to short the market next, right? And the market is falling, making lower lows, lower highs. And I have the Eddington, we are going to catch later on Skype, okay? Talking about the Canada CHF. We have 14 more minutes to finish this exercise. And I'm here. Is this or is this not a bearish candlestick formation, everybody? Okay, I lost 2 trades, buying, going long, and now I'm angry. Because you are in a downtrend but keep going long. Teacher, but the market is making higher highs, higher lows. How am I in a downtrend? I don't understand. I'm in an... Miguel says bearish dark cloud cover. Yes, sir. I lost 2 trades and I don't understand why. Teacher Eddington, look at the structure. The market is making higher highs, higher lows. How can I be in a downtrend? I don't understand. Look at structure, higher highs, higher lows. The short-term trend is up. Long-term downtrend line. Okay. Okay. So you are telling me that still, until the market breaks this long-term downtrend line, which is the last one, I should go short. But now you're above the downtrend line. Don't take the short trade now. No, I'm not above. I'm still below. We are here. Okay, we are here right now. So if I cannot make money going long, I'm going to make money going short, right? Because I still have this long-term downtrend line up here giving me support to my decisions, right? Miguel says crown forming to reverse price, short-term trend line. Okay, so let's play, everybody. Who in here is angry right now? I'm angry. I lost 2 trades and I'm going to go short right now. I have this. I'm going to remove the uptrend line. I'm going to remove the uptrend, and I have this short-term downtrend line, right? And I'm angry right now. And I have this long-term downtrend line that is giving me support to my decision. Miguel says, I think we should go short. Okay, great. So let's wait for the counter trend line break. I showed too much, but no matter what. So equity management again. One trader is going to put a stop loss 15 pips above the candlestick formation, and the other is going to put a stop loss above the downtrend line, right? So equity management, just graphically, this is going to be 1. So I want to enter, I want to make 2, right? 2 or 3, whatever. But I want my money back. I lost 2 trades. And Miguel says yes. Eddington says I don't. Let's wait for the next downtrend line break. Well, there is no right or wrong. Let's see how this trade is going to play out. Okay, we have the market is moving sideways. Tweezer tops, right? The market is falling, right? Let's see, and almost at my take profit level, right? Bam, now I'm almost happy. So equity management wise, the trader number one, the market hit his take profit, right? This is the take profit level of the trader number one, and trader number two, just graphically, this is going to be his or her stop loss. So let's see if he's going to make it. Clone again. Let's see, the market is falling, almost there, and it's retracing again. Let's see, going sideways, and the market is going up, right? So we are going to short again, right? This is the counter trend line so far. Is this a bearish candlestick formation? So I lost 2, I won 1. Not this one, everybody, but the 2 candles in here. Is this a bearish candlestick formation? No, sir, you are right. Let's wait. Is this a bearish candlestick formation? The third candle? Miguel says no. Okay, let's wait. Let's wait. So let's move that. Whoa. So this is a big retracement, right? A huge retracement. So, and let's see. Okay, so the market hit the take profit level of the trader number one, but it didn't hit the take profit level of the trader number two, right? I mean, it almost, right? So we need to manage our trades, right? And let's see. Now we have this is a counter trend line, and what is this, everybody? Is this a bearish candlestick formation? What do you think? Is this a bearish candlestick formation? No, sir, you are correct. This is not. And we are not trading anymore the downside because the market just broke our downtrend line. No, Miguel, this is not. No, this is not a bearish candlestick formation. No, sir. Okay, so we are here right now, and let's see how the market is going to play out. The market is moving up, right? And I want to go short or long, let's say. Let's see. So I need to compress the chart right now because I don't see if I'm in an uptrend, I don't see if I'm in a downtrend. I need to compress the chart. So yes, I'm still in a downtrend, right? We're going to clean up the chart. Still in a downtrend. Let's clean up the chart. And there is no right or wrong, everybody. Sometimes if you are going to put a tight stop, the market is going to stop you out. Sometimes if you are not going to put a tight stop, the market is not going to reach your take profit level, is going to reverse before. Zoom out. Is that your long-term downtrend line? No, sir, we are far away. So let's zoom out, right? We are here. Let's zoom out. Okay, and we are here right now. This is our counter trend line. black color. Counter trend line, we are still in a downtrend, right? So we lost 2, we won 1, so I want my money back, right? I'm still angry. 50%, yes. Okay, what about this one? Let's check the time. We have 5 more minutes. Okay, bearish candlestick formation. Not sure about that, but let's say yes. Okay. Now, should you enter, everybody, this bearish candlestick formation with the counter trendline break, right? So stop loss 15 pips above the candlestick formation, right? And let's see, the market is falling, right? So just graphically we would enter on the next candle close, so this would be our stop, right? Clone, take profit is going to be double, right? And clone down here. Okay, let's see how this is going to play out. Moving sideways, falling down, and right now I have my downtrend line. Again, the market's making lower lows, lower highs, right? I have a downtrend line so far, right? So I can cancel and replace my stop, right, until here, and let's see what is going to happen. The market is still falling, right? Lower lows, lower highs, and bam, we were stopped out. Okay, we make a profit. We made a profit, but it was not the best one. Why? Because we were in the beginning, we were risking more than we were making, right? But it's an okay trade. The market reversed, we were stopped out in profit. And let's check the next trading opportunity. And where are we? In here. Okay, this would be the counter trendline break. Let's wait, this is going to be black, right? Counter trendline break. And yes, bearish candlestick formation in here. Counter trendline break. Our stop loss is going to be up here, 15 pips above the candlestick formation, right? We're almost out of time, so let's see, sideways, right? And can we draw a trend line? Yes, we can, right? Downtrend line. Downtrend line, black color, right? So if this would be our trade, we would follow. Okay, and again, let's see how it's going to play out, right? So again, bad risk reward. This trade was not worth taking because this was the risk and this was the reward, right? So if we didn't manage our trade, we would be stopped out again, right? And finally the market went up, right, and offered us the next trading opportunity to go short. Okay, the next trading opportunity to go short, and we are at the long-term downtrend line. So we would enter this trade, right? And let's see. Okay, this would be a winner. Right? 1 per 2, clone, 1, 2, clone, again, clone, let's see, yes. And this is the game, everybody. This is the game. There is no right or wrong, okay? Sometimes you are going to lose, I promise you. The important thing, if you want to be profitable, you need to win more times, and of course this is common sense, right? Nothing special about this, but you need to make sense out of your losers, everybody, and you need to make sense out of your winners. That being said, stay strong, everybody, and see you back tomorrow. Stay strong, don't mess with the trades, okay? See you back tomorrow. Stay strong and trade with passion. This is FXPassion signing off.